Practical accounting. Number 16. Review. Accounting is the language of business. It is a system of measuring, processing and communicating financial information. To keep track of the business. The business process is small money in and big money out. Small money changes into a product, and changes into big money, via the customer. The business performance is measured by the income and expenses. The operation of the business depends on the cash inflow and outflow. The three elements of business are customer, product and cash. The business cycle is the movement of product and cash between the customer and the business person. The supplier. The business cycles are made up of the buying cycle and the selling cycle. The buying cycle gives rise to expenses and cash outflow. The selling cycle creates income and cash inflow. The buying cycle is made up of buy and pay. The selling cycle is made up of sell and collect. In bookkeeping, we keep track of the movements of product and cash in and out of the business. Debit CR as in, credit DR as out. Double entry bookkeeping allows the complete record of each transaction. 1. To keep track of the movement of product. 2. To keep track of the movement of cash. The process of accounting starts with the source documents generated by the buying and selling cycles. From the source documents, the bookkeeper records the transactions into the books of accounts. The accountant summarizes the books of accounts to produce financial reports for management. That completes practical accounting. Accounting is easy when you understand the flow and reasons behind it. Another business tip from LearnAccountingFast.com.